Hello, everyone, and welcome into crushthestreet.com. I'm Kenneth Amaduri, and we're going to have a very exciting interview today. Discuss what's going on in the economy, what's going on in precious metals, what's going on in the market, why it's happening, and just society as a whole. You know, it's so easy to be misled by the mainstream media and to have opinions, maybe surface level opinions based on what we're seeing, but we like to really dig down deep and understand what is going on to give us a better idea on how to formulate opinions, and especially as it pertains to our money. So I have on the line today Louis Cammarosano, and he's with smallgold.com. You can find him on Twitter and on BitChute. Louis, thank you so much for coming on the show with me today.
Well, thank you for having me, Kenneth. How's it going?
Great. How are you?
Yeah, good. Thank you.
Well, let's start off today. I kind of want to start off high level. You know, we started off with the virus, the illness at the beginning of the year, the lockdowns. Now the World Health Organization is telling us that asymptomatic spread isn't a thing. My goodness, right? I mean, isn't that the whole reason why we did social distancing and shut the whole world down?
Exactly.
So let's kind of start there, and we'll kind of navigate through what's going on in the economy.
I think what's going on in the economy, and whether it's intentional or unintentional, is that small businesses that were deemed not to be essential because of COVID-19 and large businesses which were deemed to be essential were allowed to continue. And we're seeing now in some of the cases, they've made out pretty well during this. They had guaranteed business coming their way. We've got the NASDAQ at an all-time high. Not that there's necessarily a direct connection between the economic performance of companies and the stock market, but there were companies that benefited from everything else being shut down and them being designated essential. And then on the flip side, with your small companies, not only did they have to shut down, like restaurants and other small businesses, not only did they get harmed there, but they're also the ones that then felt the brunt of the riots. So they were closed and they got harmed economically, and then they got the double whammy in many instances of getting burned down. And now you have on the flip side with the large companies, the essential businesses, they're now supporting a lot of the social justice campaigns, and they have money and they're willing to donate now to these campaigns because they're in a position where they can get it both ways. They've got the economic wherewithal and they can also do virtue signaling, whereas the small companies, as I've mentioned, they've been out of business for a couple of months, and now many of them have been burned down. And whether it was intentional or not, but that's a two-hit on the small businesses, and it looks like the larger companies are coming out of this stronger than ever, and that includes social media companies like Amazon, where a lot of the business went directed online. And when they have that type of power, then they can start banning books, and they can start censorship, and they can start directing social policy, because there's really nowhere else to go to buy your goods or services and nowhere else to work, because those are the places you have to work and those are the places you have to buy your goods and services.
So what do you think about this lockdown? I mean, my goodness, is this like some sort of social experiment? Why did we react to this virus the way we did? I mean, the whole world, billions of people in their homes. I mean, what was the purpose of this?
From day one, I never saw the purpose of it, because they have never done anything like this in the past. There was never any indication that the virus was so virulent that it was going to wipe everybody out that would require that. They had, if you recall, there were exceptions to it. Now, if something is so dangerous, then a lockdown is a lockdown, and you shouldn't go anywhere. And they allowed these trips to essential businesses, which are grocery stores and pharmacies. So, well, you have to allow them to go eat. Well, not necessarily. If you're going to be that draconian, they could have had delivery and hazmat suits. They allowed people to go to grocery stores. And if you remember, when they first put these lockdowns in place, Kenneth, there was no social distancing. There was no testing of employees. There was no PPE. There was no plastic guards. You could just go there, and there was no limit to the number of people that can go in. And as time went on, they started to push these types of restrictions on the pharmacies and the grocery stores. And just when everybody got used to all that, waiting in line to go into the store, keeping your 6 feet distance, wearing your mask and all that, the riots started and the protests started, where there was none of that. So it kind of threw the whole thing out the window. It made a mockery of all the social distancing. I remember I saw that video of the woman who got chased out of a grocery store in Staten Island for not having a mask on. People taking their mask off to yell at them, to yell at her. And somehow you can go to a protest with thousands of people. And when that hypocrisy was brought out, they defended it. They said, well, that racial injustice is an even greater threat than COVID-19, essentially downplaying COVID-19 or upplaying the level of racial injustice. So I don't know what it is, but the worst part about all this is how easily people accept those two positions, which is, in a sense, collective cognitive dissonance, where you believe that you can't go anywhere, you must stay home, stay safe, be locked down. Somehow you're not going to catch COVID if you go to the grocery store or any other essential business, but you're going to catch it getting a haircut. And you're not going to catch a virus if you go to a protest, because everyone knows that the virus selectively picks who it's going to get sick. And that to me is astounding, how many people have actually, they live that collective cognitive dissonance, and they can think that it's okay to go to a protest, but otherwise you can't go to your own funeral. Obviously you can go to your own funeral, but you can't go to a relative's funeral. But you can go to George Floyd's funeral with far more people in attendance.
Yeah, I'm curious to see what the statistics are going to be like now after these riots and whatnot, if we're going to see some massive spike in numbers, or if it's just old news now. We're just now moving on.
Or it was never news. Or maybe
it was never news. Exactly. Well, despite that, some people are saying, well, because we were in a quote unquote good economy in February and this event came along, maybe we just go back to where things were in February, pre-crisis. But you have to consider that a lot of damage was done to the debt, to the infrastructure, to economies, small businesses. I mean, we have large businesses getting bigger, small businesses never returning. I mean, this is not like we just return equally as if nothing ever happened. I mean, what do you think the consequences of this are going to be?
Well, unfortunately, if you look at the numbers, in a sense, larger corporations are more efficient than smaller corporations. So it could actually look like more people are working, companies are more efficient because they're larger and they're involved in economies of scale. That doesn't mean that things are better. Then also, what is the impact of all that money printing? One of the things that we saw were people who, let's say they had an okay job, they were making decent money, let's say they were making more than minimum wage, but not much more. Well, when they were told that they could not work any longer, normally if you lose that type of job, you go on unemployment, but unemployment doesn't cover your expenses, so you generally get another job as soon as you can. But in this case, you weren't allowed to go get another job, so the government paid you in addition to your unemployment, let's say with half of your salary, and let's say that's only your weekly salary would only amount to $400. Well, the federal government topped that up and gave you $600 a week until the end of July. So you could conceivably be making $1,000 a week not to work. And when you have people cooped up, they can't go anywhere, they're going to spend that $1,000 because that's probably more than they had budgeted when they were making their $15 to $20 an hour. And then that led people to start speculating in stocks and Bitcoin. You see these Robinhood accounts, all these stories coming out where people are buying these speculative stocks like Avis, which is in bankruptcy, and making multiples of their money. And then we're seeing people have free time on their hands. And so they can go to protests and they can go to riots. And so I don't know what the impact of all that is. But one thing I do know, Ken, is that money printing neither creates nor is a substitute for economic activity. Because if you just print money and give it to people, there has to be somebody making the products for you to buy. It doesn't exist in a vacuum. Now, I guess there's enough companies that are open, the large companies, to produce the goods and services and the toilet paper and things that people need. But clearly there's been a concentration of the economy into the hands of these larger mega corporations because they were deemed essential. And whatever money that people got to spend, they didn't go down to the local hairdresser or the local uh, any local business, local restaurant spend it. They spent it at Target. They spent it at Walmart. They spent it. They stayed home and they spent it at Amazon. And those are the companies that were the direct beneficiary of the free government money.
Yeah. Well, what are your thoughts on the stock market then? So many people, and I mean, even Warren Buffett, right? He sat on the sidelines and did not buy the dip in March, mid-March, when we were seeing the fallout. The Federal Reserve stepped in, trillions of dollars of money printing entered the system, and stocks responded. And, you know, that was one of the things that I was hedged for. I said, you know what? You have to be open to the fact that stocks are going to reflect the underlying money printing that's going on. I don't know how long that can go on for, but it's what I see is it's a dollar issue. It's not really a stock issue. It's a dollar issue and assets going up in relation to dollars. So I don't know, maybe flush through that a little bit if you can and make some sense of what's going on in the stock market.
It is a double issue. It's a dollar issue, and it's also the Federal Reserve knowing that it's a dollar issue and knowing that the two most important strategic assets the United States have are the dollar and the stock market. And they, in a sense, we should have learned our lesson in 2009, 10, and 11, that money printing itself does not, well, it doesn't create economic activity. It doesn't mean that the stock market is going to reflect the economy. Because if central banks, and they've gotten far more aggressive than they did in 2010, 11, are going to print money and are going to engage in stock trades, stock currency swaps, they're going to buy corporate debt, they're going to effectively provide a floor to the stock market, and they can do it fast. And we saw what happened, that you had the peak in February, and then you had the dip, I think it was March 13th, and then boom, we're now back to all-time highs. That's not because the economy went down and came back. That's because the economy fell because of the shutdown and realizing that that was going to have a severe economic impact. If you think about it, you shut everything down. That's beyond the Depression. Even in the Great Depression, things weren't forced to be shut down. But somehow during the shutdown, they managed to print up the money, enter the stock market, and push everything back up. And it highlights it's a fallacy that the stock market has any connection to the economy. And then with respect to the dollar, you're absolutely correct. If you get free dollars, well, you know they're kind of free, even if you're not really somebody who's paying attention to the economy or someone who follows economics. You're gonna buy stuff with it. You're gonna buy stuff with it that makes sense to have because you need it. If you have any excess money, there's no point in putting it in the bank. So you go on Robinhood and you just shoot at a dartboard and you pick stocks. And you pick stocks because everybody else is picking stocks, not based on fundamentals. They're picking stocks based on the names that they know. For example, Tesla is at an all-time high, not because Tesla has done any better the last 2 years than it did the last year or the last 4 years. It's just because other people are buying it. And so stocks become supply and demand, not based on fundamentals. It's just based on what everybody else is buying. And when the Fed is buying stuff and central banks in Japan and Europe and all over the world are buying stocks and bonds, they go up. And they buy them, again, not on the basis of any fundamentals. The Swiss National Bank is involved in buying U.S. equities, and they don't buy just dividend stock. They buy whatever. They buy the index, and they buy companies that are in the index, companies that don't make any money. So the people are smart and they're stupid at the same time. They're buying stocks because, in a sense, what's the point of holding on to dollars? That's the smart move. But then to buy stocks that don't make any money, that doesn't seem so smart. But they're proven to be smart because those stocks go up. Well, for without any reason. But you know what? If you're a person who's got the $1,200 stimulus money, $600 stimulus money, and you put it in and it goes to $4,000, would you rather be $4,000 up or smart? It doesn't matter. And that's what we're seeing, an entire disconnect in all the speculation. And nothing is a real economy when they can pay you not to work and you don't work. It used to be in the Soviet Union where they say we pretend to work and they pretend to pay us. Well, now it's, they don't even ask you to pretend to work. They're just going to pay you. Well, where else is the money going to go? I mean, most people don't know about gold, silver, and Bitcoin. It's too complicated. You get a Robinhood app, you can just go on there and start trading stocks, and that's what people are doing. Now, again, it'll all end badly, we think, but all these stock market predictions that end badly, the Fed just steps right back in and pumps the money in, and then the bad times are, they last a week or two, and then it goes right back up.
It's so true. And I you look at what happened in the 2008 financial crisis, and stocks took 6 years to recover from their lows. I mean, we saw this quick snapback. I mean, some are maybe calling it the fastest Great Depression the world has ever seen, and due to the money printing. And so the problem with all of this is that it has to go somewhere, and we are seeing it go back into stocks. But I think for people who really understand, hard assets, finite, and then obviously valuations, fundamental valuations, we look towards gold and silver and say, this is where the capital flow should ultimately go. But with stocks doing what they're doing, I think it's distracting people. So what are your thoughts on this?
Well, should, but don't. I mean, that's unfortunate. Look, Warren Buffett did not invest in the dot-com bubble from 2005 to, 1995 to 2000, right? Well, those were some real gains that happened during those five. Eventually it ended. But it's the same with real estate. These bubbles that they have, they last longer than they should. They're creations of money printing, loose monetary policies. They're designed to do this. I mean, Bernanke has said, Yellen has said, all the Fed chair people have said that they want to create a wealth effect. And the way they create a wealth effect is to boost asset prices, not realizing that not everybody has assets, but they boosted real estate prices, they boost stock prices. But those are, in a sense, real world gains, whether they're justified or not. And what they've proven is they can boost these asset prices. And they can actually use the money that they print to suppress and keep people away from other assets like gold and silver. Because if you can make it short with as much money as you want, you don't have to worry about losing money, because you're not really losing anything if you can just print it up and throw it, or say you have it, because to make it short, you don't even really have to put the money up. You can drive prices down of real assets and boost prices of assets that you want to rise. And that's where I think people still don't quite get when they say free markets are going to take over. We don't have a free market. We have a captive market. Those markets are all regulated by the government. They're all authorized by the government, and they're national security assets. And that's why the stock market always comes back. That's why Trump, he's a lot of people think that Trump just talks and says stuff. He knows the stock market can go back. He wouldn't be touting the stock market if he didn't know that he didn't have direct control over it, or almost direct control over it, through the Treasury, through Mnuchin. They were able to and through browbeating the Fed, but the Fed didn't really need an excuse to print money. That's what they were hankering to do anyway. So I think that, we're all looking at this from a pure Austrian economic free market view, and none of this makes any sense. And of course it doesn't, because economies don't work this way. But these aren't economies. These are rigged games that are part and parcel of the socio-political world, as much as they are, if not more, than the economic world.
So let's talk about the precious metals world. I mean, obviously there's a lot of frustration out there. Many people would have saw gold. I mean, if you would have explained 2020, I think, to most people last year, like, hey, this is what's going to happen, I think people would have said, well, we're going to be at like $5,000 gold.
Right.
Right. You know what I mean? You're like, it's going to be 40% unemployment, or what is it? 40 million people unemployed. I mean, all these things, all these ridiculous numbers.
Perfect storm.
Printing
Perfect storm.
And $1,700 gold is like, okay. I mean, I guess. So what are your thoughts on gold, and do the chips settle where gold continues to go higher here, in your opinion?
Yes. Yes. I think the last time we talked about why silver wasn't reacting and why silver was actually going down versus gold. And gold still is, no matter what they say, and there are still adherents to gold as solid money, sound money, and so on. And there are societies that believe in it in China and in India and in Turkey, in Germany, parts of the United States, where it is a go-to asset for turbulent times, turbulent economic times. It's an inflation hedge. And unfortunately, a lot of the way they buy it in the Western world is through ETFs. But the real thing that I think that people, and it's gone up. I mean, look, it's almost near an all-time high. And if you take away the strength of the dollar, gold is at all-time highs, and the Canadian, well above the all-time highs in Canadian dollars, Australian dollars, just a Europe, just about any currency other than the dollar. So it has performed pretty well. It just hasn't skyrocketed. The one that people are shaking their heads over, the people in the precious metals, is silver. And they're saying, well, look, silver is so undervalued compared to gold. And this is something we discussed last time when the gold silver ratio was 70 or 80 to 1. We thought, well, that's outrageous. It actually got to 125 to 1 just a few weeks ago. Is that silver doesn't have the same allure as gold, and silver is more of an industrial metal. And right now, if industry is going down, then there's less demand for silver. But silver, I still think, can catch that investment bid that gold gets. And because it's such a small market, that if that investment portion of silver catches a bid, it could eventually start to outproduce gold, just like it finally did in 2010 and 11. But so far it hasn't. It still hasn't even hit the $19 point that it hit in 2019. It's still in the, what is it, like $17.80. It's not even $18 yet. It's kind of flirting with that. The gold silver ratio has gone down now to still around 100 to 1. I do think, though, there's really nothing that's going to change. We'll see what the Fed has to say today at 2 o'clock. We're recording this about a half an hour before they release their meeting, the results of the meeting. But I don't see the Fed turning around and saying, we're going to normalize the balance sheet like they tried last time. We're going to raise interest rates. And all that's, well, it might not drive millions and millions of people and billions of dollars into the precious metals. It will have an impact, because if they're going to debase the dollar and they're going to stay at zero interest rates, and other countries are going to go negative, it's an attractive place to be, at least with respect to putting your money in a bank account.
Right. Well, let's talk about Bitcoin, because I love Bitcoin. I know you like Bitcoin as well. Let's talk about what the potential is. I was having a conversation with Mark Moss, interesting guy. And he described Bitcoin to me as a 5-year-old LeBron James, when discussing it to people and trying to speculate on the opportunity. You don't know if 5-year-old LeBron James is going to throw a tantrum or get mad, but man, he's dribbling the ball great. He handles the ball great, and he's got superstar potential. I thought that was an interesting comparison. What are your thoughts on Bitcoin, where we're at now, and how it's responding in this crisis?
I think Bitcoin is interesting because when it first came out, I was of the view that, okay, it's nothing. I used to take the Peter Schiff point of view, there's nothing you can do with it. Why would anybody ascribe any value to it? Okay, you've got mining. It's all a simulated gold is what it is. And I still believe that. However, I also believe that what I believe doesn't matter. And I think that's the important thing. A lot of people can't get past that. And because there are people who believe in digital money, who believe that you can ascribe value to digital assets, well, then they have value. And the proof is in the market. They have a value right now. Bitcoin is approaching $10,000 again. Now, it's been around for 10 years. To say that's a bubble, and the fact that the lower high, every year there's a lower high in the price of Bitcoin, means there are people that value it. And the key that I think what convinced me is, it's just like gold and silver. It's just like anything, whether it's fine art, stocks. In order for an asset to be successful, it doesn't require universal acceptance. So, for example, you may think a Jean Moreau painting is garbage. Well, it doesn't matter what you think. You're not in the art market. I'm not in the art market. Someone's willing to pay $18 million, $400 million for it. It's the same with Bitcoin. There are enough people who find the attributes of that digital asset where they can spend it. They know that you can't counterfeit it. They know that it's secure on the network. They could take it from border to border without having to worry about a physical asset. They all view that as a valuable they view those as valuable attributes to Bitcoin, and they're willing to pay for it. And if there's enough people, and there's a growing number of people who are willing to pay for it, willing to trade it, that's what gives it value. So I think that Bitcoin, there are enough people that do view it as digital gold, do view it as having a real value, do view it as scarce, and it's a classic, whether it's artificial or not, or digital or not. there is a supply demand issue with Bitcoin, with the halving, and with people are actually buying more Bitcoin right now just from, I think it's Grayscale, into their Bitcoin fund. And then if you add in what's purchased on Square and Coinbase and other places, the newly mined Bitcoin doesn't satisfy that demand. And there's not going to be more demand. There's not going to be more discoveries. More supply. There's not going to be more discoveries of Bitcoin. And if more people continue to want it, then supply and demand means it goes higher. Now, with the caveat, if you look at the trading of Bitcoin, the amount of Bitcoin that's traded every day, just like the gold and silver market, far exceeds the amount that's, the way I look at it is how much is actually transferred from wallet to wallet. So in a given day, Bitcoin wallets transfer 3, 5, 10, 15% of Bitcoin, but they trade in multiples of that on the exchanges, which means no one's really exchanging or trading Bitcoin when they're on an exchange. They're trading a derivative of it. It's only when you ask for the Bitcoin to be sent from the exchange to your wallet that any actual Bitcoin gets exchanged. So Bitcoin can be subject to, despite the supply-demand dynamic that would be favorable, can be subject to manipulation, the same way that gold and silver are. And that could suppress the price.
Yeah, that's an unfortunate thing. I guess, though, the one thing that I've been telling people when they talk about price suppression of Bitcoin is I almost feel like it needs to go to like 50,000 before it gets settled, before it can be truly manipulated. It's just such early stage right now to, I don't know, be exposed to that, because I think there's a lot of backfilling that needs to happen in Bitcoin for it to get to some sort of equilibrium, to, absorb the amount of money that will enter the space from hedge funds and manage money and just all of the adoption that's going to happen over the next few years. And then we maybe get to a point where, there's manipulation. And, I know people will say that maybe it's happening now, but I just think that there's a lot of upside until we really get to some sort of price equilibrium.
I agree with you. I don't think that Bitcoin will stabilize. If you look at it over the past few years, it goes from like 20,000 to 3,000, 12,000 to 3,000. There's a wide range. And whether that's manipulation or not, it just indicates the small market. The same with silver. Silver, however, has been around a lot longer, and there's not a lot of new people coming into the silver market the way they are coming into the Bitcoin and other crypto markets. And I think Ethereum is the same thing. I think there's a bright future for that with a lot of the cryptocurrencies, or a lot of new applications run on Ethereum. They'll be paid for with Ethereum. So that's going to drive some demand there as well.
Yeah, I got a simple thesis for Ethereum. If Bitcoin goes to 50,000, I think Ethereum's going to get the spillover of that and be the leveraged exposure. That's my simple thesis for Ethereum.
You don't need to get much more. And then you could also say that a lot of Bitcoin maximalists don't believe this. They think that every other coin other than Bitcoin is an S coin. But I do believe that certain altcoins will also get caught in the updraft and probably outperform Bitcoin too. Coins like Litecoin or whatever.
No, I know more about Ethereum than that. I'm just oversimplifying, but no. I just think because of how bullish I am on Bitcoin, I think just that alone, Ethereum is going to benefit from it and have a massive move. So anyways, Louis, thank you so much for coming on Crush the Street. Share some closing thoughts with us, if you would, maybe as it pertains to what's going on in the economy, words of parting advice.
No, I generally don't give advice. I just have some observations. I've been putting them out on smallgold.com and BitChute. I'm not on YouTube anymore. I've given up on the platform. I just don't trust that people aren't self-censoring just because of the amount of censoring that we've seen many of our colleagues go through with strikes, demonetization. So if you want to find me, I'm over on BitChute and Smallgold. I'm on Twitter a lot, but I try to stay away from Facebook. I've tried Parler, I've tried Gab, but most of the content that I've been providing has been on Smallgold and on BitChute.
All right, sir. Thank you so much for your time and coming on with me at Crush the Street.
Thank you very much, Ken.